Solana is pumping and it's not by accident. What we're seeing is a confluence of technical evolution, renewed investor confidence, and a strategic partnership that could redefine how institutional players interact with blockchain infrastructure. While price movements often come and go, what separates this moment from the noise is its foundation in real developments. Solana isn't just riding a speculative wave, it's building the rails for the next financial architecture. And that's what we're diving into today. Solana's recent surge has caught the attention of both crypto natives and traditional investors, not because it's unexpected, but because the timing reflects something deeper. Over the past few months, the network has demonstrated resilience, scalability, and an ability to attract top-tier partnerships. This isn't the Solana of 2022 struggling under congestion. This is a chain that has quietly optimized itself, expanded its developer base, and aligned itself with narratives that resonate well beyond crypto Twitter. At the heart of this resurgence is a set of partnerships, some public, some still under wraps, that indicate a pivot. Solana isn't trying to be Ethereum's clone. It's carving out its own path, one that emphasizes speed, affordability, and institutional readiness. One of the most talked about partnerships recently involves the integration of Solana into a financial technology stack designed by a firm with deep ties to the traditional banking world. This is not your average DeFi play. It's a signal that Solana is being taken seriously in conversations that used to be dominated by the likes of Ethereum, Hyperledger, or even private enterprise chains. Let's zoom out for a moment and understand what makes Solana unique. Technically, the chain operates on a proof-of-history consensus mechanism combined with proof-of-stake. While that sounds like jargon, the real takeaway is speed. Solana can process thousands of transactions per second with minimal fees, sometimes less than a cent. For years, this was dismissed as unsustainable or flawed, especially after network outages. But the team didn't abandon ship. They rebuilt. Validator infrastructure was improved. The ecosystem matured. And while the average retail investor might have tuned out, developers didn't. In fact, over the last 12 months, developer activity in Solana has quietly become one of the most robust in the space. According to data from Electric Capital and GitHub Analytics, Solana now ranks among the top 3 chains in terms of monthly active developers. This isn't a meme coin ecosystem. These are real projects building everything from tokenized equities to consumer loyalty platforms, from high-frequency trading engines to AI data marketplaces. And many of them are backed by serious capital. Now let's talk about the partnership that's been driving much of this momentum. Solana recently announced a collaboration with a digital infrastructure platform that caters to institutional finance. The goal? To bridge real-world asset flow into the Solana chain in a way that is compliant, fast, and scalable. Unlike previous experiments that simply tokenize bonds or real estate for the sake of it, this partnership is focused on end-to-end usability. Think custody solutions, on-chain settlement, automated compliance checks, and integration with fiat rails. It's not just wrapping assets. It's reimagining how they move. One of the firms involved in this partnership, whose name carries weight across Wall Street, is providing the backend for clearing and settlement. What that means is, when an institution decides to move tokenized treasuries, for example, they can do it not only on Solana but with the same confidence they have when using Swift or the DTCC. That's a huge leap. For years, the biggest hurdle for blockchain adoption in finance hasn't been technology, it's been trust. This partnership addresses that head-on. As news of this development broke, crypto markets responded, but the real impact wasn't immediate. It took a few days for analysts, influencers, and institutions to realize what this meant. And then the inflows started. Solana's total value lock surged by over 30% in a span of 2 weeks. The centralized exchanges built on Solana started seeing record volumes. And perhaps most importantly, stablecoin issuers began increasing their on-chain presence. UST and other dollar-pegged assets found new utility across Solana's rails. But the price action is only part of the story. What really matters is the narrative shift. For the past 2 years, Ethereum has dominated institutional mindshare. Whether it was JP Morgan's Quorum, BlackRock's experiment with tokenized funds, or the endless stream of Ethereum-based ETFs being proposed, the conversation was one-sided. Solana was seen as fast but fragile. That perception is changing and fast. With every successful stress test, with every zero downtime month, with every new D-app that proves sticky, Solana is rewriting the script. Let's consider the user experience. One of the reasons Web3 has struggled with adoption is friction. Wallets are clunky. Transactions take time. Fees are unpredictable. Solana changes that. The combination of fast finality and negligible gas costs makes it possible to build applications that feel like Web2 but with the power of Web3. And when large consumer brands look to integrate crypto into loyalty programs, ticketing, or digital collectibles, Solana is suddenly top of mind. There's another dimension to this culture. Solana has built a culture that is surprisingly open source, builder-friendly, and focused on shipping. It's not bogged down by governance wars or ideological purity tests. It's pragmatic. And that pragmatism is attracting talent. Developers who once swore by Solidity are now learning Rust and anger. Hackathons hosted by the Solana Foundation are seeing record participation. And venture capital, always a lagging indicator, is flowing in again. Of course, no chain is perfect. Solana still has to prove that it can maintain uptime at scale, especially during bull market conditions when traffic spikes unpredictably. It also faces pressure from Ethereum layman issues, which have improved significantly in terms of speed and cost. But the difference is strategic positioning. While Ethereum focuses on modularity and rollups, Solana is betting on monolithic architecture. Everything happens on one layer. No bridging, no fragmentation. That's not just a technical choice, it's a UX philosophy. Another factor often overlooked is Solana's unique community of validators. Unlike Bitcoin or Ethereum, where mining or staking is often dominated by a few players, Solana's validator set is growing and diversifying. The incentives are structured in a way that encourages decentralization without compromising performance. And that's crucial, because institutional adoption doesn't just need speed. It needs resilience, redundancy, transparency. Now, let's touch on the retail side. Crypto adoption isn't just about billion-dollar funds and hedge desk flows. It's about the everyday user. And Solana has quietly become a haven for NFT artists, game developers, and independent creators. Platforms like Magic Eden and Phantom Wallet have made onboarding remarkably easy. And the recent boom in Solana-based meme coins, while speculative, has brought attention and liquidity into the ecosystem in ways that often lead to deeper engagement. Many who come for the meme coins stay for the yield farms, lending platforms, and even governance. The timing of all this is critical. As global interest rates stabilize and macro uncertainty begins to recede, risk on assets are coming back into favor. Crypto, especially the sectors tied to real utility and institutional alignment, stands to benefit. Solana checks both those boxes. And with this new partnership, it's not just a blockchain for experimentation, it's a chain for execution. Looking ahead, the roadmap is clear. The team has announced upgrades that will further reduce latency, increase throughput, and improve developer tooling. Partnerships with major financial institutions are no longer theoretical, they are operational. And the community remains one of the most energized in crypto. When Solana pumps, it's easy to dismiss it as another cycle. But when that pump is backed by fundamentals, it's different. What we're witnessing isn't just a price move, it's a repositioning. A new chapter in Solana's story, one that sees it move from an alt-Ethereum into a chain with its own destiny. And if this partnership is any indication, that destiny is no longer confined to crypto-native circles. It's global, it's institutional, it's only just beginning.